I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of the WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk to you. Some interesting things in the markets, that's for sure, that look like they're lining up.
Well, for the last 2 days, U.S. equity markets have been falling. Is this the start of a correction, or is this just a 2-day blip?
Well, I mean, we've seen a couple pauses this year where the market would pull back to the 50-day moving average. None of the drops are substantial. I don't think we haven't seen a drop this year more than 5% off of the 52-week highs. And the Dow, interestingly enough, hasn't gone up or down more than 1% in a single day for a record. It broke that record last Friday when it did that for 50 days in a row. So there's zero volatility in the stock market, and I don't think that's changing. I think the low volatility is going to stay for at least the rest of this year. But in that kind of environment, you do get these little pauses. We saw that, like I said, in July and August, and it appears to me we're pausing into Thanksgiving. Seasonally, the market actually does that. Typically, when you have an earnings season, the market does pull back a little bit as you reach the end of that, and then go up again. And we just are kind of completing that earnings season, and also seasonally, the stock market tends to pause in November, and actually rally a little bit Thanksgiving week and dip the first week of December. Then it almost always goes up in the end of the year. So all those kind of seasonal factors seem to be lining up with this little dip that's going on right now. And I'm actually kind of expecting a lot of markets to pause here and then start to rally around the next Fed meeting in December. The Fed is widely expected to raise rates by a quarter point. However, after that, we may not ever see another rate hike in this cycle. The Fed fund futures are projecting one more rate hike in 2018 by the middle of that year. One isn't much of a rate hike for an entire year. And one of the reasons that's the case is Trump had several choices of who he could pick to be the next Fed governor, and he picked Jerome Powell, who is the most dovish person he could have picked, and he's been called a Janet Yellen clone on Bloomberg. They said that, with the caveat that he believes, unlike Yellen, that banks were treated unfairly in the 2008 crisis, and that they've been demonized and that they deserve to be further deregulated. So he's like the candidate of Wall Street. But more important for investors is he is an easy money person, does not want to raise rates rapidly, and likes to keep rates low just like she did. So I really think we're looking at a low rate environment, and that one rate hike in December, people in the commodity markets are kind of factoring that in right now, and you're seeing some weakness in like oil, soft commodities in the past couple of days. However, interesting enough, the bond market, the yields on the bonds are getting closer together, meaning the long-term yields are actually been declining over the past couple of days, and getting closer to the short-term yields, which means that the bond traders are getting dovish on interest rates too. Don't really see many coming next year. I think this is going to all set up, not just a bounce or rally in the stock market, but a big rally next year for gold and mining stocks. And that's really the most interesting part of financial markets I see right now.
We'll have more with Mike Swanson right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Welcome back. We're speaking with Mike Swanson. Mike, some people have said they feel we're going to see a Santa Claus bounce in the market this year. Do you have any feelings on that?
Yeah, I think that's really kind of what's setting up here, that we're getting a little bit of a pullback from the high, as you said, over the past 2 days. And I think, that sort of pause can continue, but that will line up for some sort of Santa Claus type rally in the second half of December. But to me, that's really would just be a continuation of what we've seen all year, of low volatility in the market, but the trend overall being up month by month. Nothing really deviating from what we've been experiencing for really since January or the first quarter of 2016. What I'm actually more interested in is the gold market, because unlike the stock market, gold has not been going up every single month. It's basically gone sideways all year, with a range of 1350 being the high and about currently 1250, 1260, somewhere in that area being major support. And it's just drifting with extremely low volatility there. And if you look at something like the GDX Gold Stock ETF, it's got support really around 22 and resistance about 25, and it's been between those levels for almost all year. And if we break above 25, I think that's going to signal a huge, big, powerful up leg. So that's a different position than the stock market is. So if the stock market, say, rallies in the end of the year, you're basically continuing a rally that started in the first quarter of 2016, just getting a little bit more, a couple percent, and then we go into 2018, and we're like, have to evaluate things. Are we going to keep doing this? Or at some point, this market will top out, or really have a real correction, which we haven't seen in so long. It's easy to forget that they can happen, but it will happen again. So we're going to have to be on guard, every month for that possibility, and looking for signs that we're making sort of a transition into that. But with gold, if we break through 1350 next year, that's going to be not just the continuation of some rally, but the start of a big rally. And there's a big difference in, buying something that's already been going up for 18 months and buying something that's just starting a move. So that's why I'm kind of repeating myself when I say this, but that's why I'm very interested in watching the gold and the mining stocks. I think they can start something really big here going into the end of the year. And I would really keep an eye on the Fed meeting in December. It's the middle of that month for a turning point. If you look at the last couple of years, in fact, the gold has tended to make or begin rallies or moves around that Fed meeting that's in the middle of December. That's got a funny pattern to the markets in general the past 2 or 3 years, where the Federal Reserve seems to like to raise rates in December, and then they'll make all these predictions about doing 3 or 4 more rate hikes the next year, and then what ends up happening is they don't do as many as predicted, but they try to get one in December, and that's what happened last year, the year before. That's basically what's happening now. And the reason they seem to like December so much is seasonally it's a time of year where the market does go up into the end of the year. And so I think they feel they can raise rates then without causing, too much damage or causing people to sell. And of course, one reason people don't sell in December for the most part is if they've got gains on their stocks. It's easy to just say, well, I'm just going to wait a couple weeks and sell in January and delay the taxes I'll have to pay for another year on this. And so that's one of the big reasons why December tends to be a bullish month, particularly as you get closer and closer to January the 1st.
We'll have more with Mike Swanson right after this.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Mike Swanson. Mike, is there any feeling that the tax cuts proposed by the Trump government will either be drastically delayed or, like every other piece of proposed legislation, end up not happening at all?
Well, that's a big question. First of all, I'd say whatever happens, I think the impact in the stock market will actually be temporary. So assume they do happen. I don't think that's going to mean this massive economic boom is going to happen, or it's going to change the face of the American economy, as so many people who support the tax cuts are making claims to that effect. And the reason I say that is because many of these corporate CEOs have already pledged that if they get a tax break or the repatriation of offshore money in the United States, which I think is very likely to happen regardless of what happens with the tax cuts in general, but they've pledged to use this for stock buybacks, not for building new factories or stimulating their companies or anything like that, but purely buying stocks out of the stock market to make the stocks go up, to help stock market investors, but more importantly to help the CEOs and board members get in a position where they can dump even more shares. So that's where the tax cuts ultimately are how they're going to impact the economy. It isn't by creating jobs, but by creating higher stock prices to help insiders cash out at higher prices themselves. So now let's say they don't happen. At the same time, I don't think that would cause the stock market to collapse overnight. Interestingly, the Treasury Secretary, Steve Mnuchin, has claimed that. He's actually claimed that if the tax cuts don't happen, the stock market will crash. I would assert that it's very unlikely that there would be some instant crash in the stock market, that instead, when you have a bull market like we have had for years, it doesn't just end overnight, but typically it takes several months to transition and form a top that leads to a big drop or a bear market. So I think there's plenty of time, if they don't happen and the market's going to roll over to adjust and figure out what's going on. I mean, there might be a correction, and then a bounce back up or something, but that can happen regardless of what happens to the tax cuts. In fact, if the tax cuts do come out, it could be that the market corrects anyway. If people just use that as an excuse to take profits, then you're like, oh, it'll bounce back up and we've got to see what happens. So personally, when it comes to stock market, I don't really think what happens with the tax cuts matters in the big picture over what's going to happen in the next couple of years. I mean, if there's a corporate buyback surge, it's more like a pump and dump situation. It's not going to create a new bull market. It's just going to be a temporary price surge, and you sell your stocks or it's short or whatever when it ends. But are they going to happen or not? I've got to believe they're going to do something, even if the current bill that's in the Senate or the House, if one of them two fail, you would expect something will be passed, but it's very chaotic. I mean, every single day they kind of change what they want to do. Today I was just reading that the Senate bill is going to only make the cuts to individuals temporary, and they'll expire in 8 years, while the corporate cuts that are going to take the rate that they want down to 20%, or lower than the individual rate even, that they will be permanent. So it's just like, and of course there's this controversy over tax deductions. If you live, you lose your tax deductions on the state and local taxes you pay, on the real estate taxes you pay, on the mortgage interest you pay. I mean, I can tell you myself that I'm an upper middle class person, and from the current form of the legislation won't make any difference to me, because I'll lose all my deductions that I got, basically, and see a little bit of my tax rate lowered, but it'll just be a wash. So, and some people will pay more. If I lived in New York or one of these higher tax states, or California or New Jersey, then I would probably be paying more taxes the way this bill is set up. And now they're talking about changing something with the healthcare benefits that would take off like 13 million people. So it seems very chaotic and confusing. When Ronald Reagan did this, he spent several years, and it was very well planned out. This seems almost like they got to get something. They got to get something done. They got to get something done. So that makes it more likely that they will pass something in the end, but who knows what it'll be. So it's something we just got to watch day by day or week by week.
Do you find it surprising, considering the Republicans have the White House and both houses?
No, not necessarily. The biggest obstacle, well, I think there's two things going on. First, Trump ran, making lots of promises. I mean, any politician makes promises when they run for office, but I mean, he made so many. For instance, he wanted to do a trade war with China. He says he was going to pull back on our intervention in other countries overseas. Those are two promises that have not materialized at all. He just went to China and he did the complete opposite. He told the Chinese that, that they were basically, he doesn't blame them for stuff, and he made no moves to do trade wars or tariffs and all that. And overseas, he bombed Syria. He's supporting Saudi Arabia and intervening in Yemen, and they just kidnapped the Prime Minister of Lebanon and doing all kinds of crazy stuff. It's hard to keep up with what's going on. The military budget has just been increased to $800 billion. So there's no pullback in overseas. And of course, we saw what happened with Obamacare. He promised to get rid of Obamacare, and it didn't happen. Now, for the typical, I'll just say conservative type person, that voted for Trump, they'll think, well, that's not Trump's fault, because it's really the Senate or the Congress that can't do all these things. It's Mitch McConnell. He didn't get rid of Obamacare. Trump wanted to, and they tend to think Trump is a Superman, because he won the election, and if anything isn't done, it's not his fault. I think the reality is, something that no one really talks about, and that's basically that the country is broke. So the budget deficit's busted, and it's just, that makes a situation where it's very difficult for Congress, or the president for that matter, to cut taxes or do much of anything, because they don't have the leeway to cut anything or change things. You're going to make lobbyists angry or whoever. So I think that's the actual source of the gridlock and inability so far for much to happen out of Washington to make things better. Look, we were saddled with two big things, and that's the war on terror after 9/11. The United States has spent over $8 trillion fighting in Iraq and Afghanistan, $8 trillion. And then when the 2008 stock market crash happened, we spent $1 trillion bailing out the Wall Street banks. Now, I know Jerome Powell, who Trump has picked, says that the banks were unfairly treated and demonized, but look, we gave them $1 trillion. So, to me, that tells me that no matter all the stuff Trump said during the campaign, by picking that Powell guy, there's no real serious change. Mnuchin is there too. Gary Cohn, he's a Goldman Sachs guy. There's no serious change or deviation from the group of people that helped create the malaise in the United States in a decade ago and now. I mean, it was Goldman Sachs guys around George Bush that were in the Treasury Department that Obama carried over, and Timothy Geithner, for instance. And Bush has kept the same types of people, Trump has brought in the same kinds of people. Whatever the reason that is, you can only speculate, but I just think we got in a bad situation a long time ago, and that's sort of why Trump actually won, because people suffer from all this, but there's been no meaningful change that I can see, except that there's lots of people that get in controversies over Trump's tweet, and he gets people angry, or they get angry at him, and this is, you turn on the TV in the morning and it's going to be something about Trump's tweet. There's some guy trying to impeach Trump today, you got a bill to do it, and on and on and on, but no one will talk about the real reasons we got in this situation, and it's not really Donald Trump's fault, but it also makes it hard for how they're going to cut taxes when we've got this big budget deficit, and part of the rules of the Senate is they can't bust that deficit much more. So what are they doing? Well, that's why they're taking away deductions and playing these games, taking away 13 million people's health care potentially. They're not cutting everyone's taxes equally. Instead, they're going to have to grab money from someone to give it to these corporations so they can get their 20% tax cut. So that's what is really going on, So it's just kind of like a mess.
What kind of a tax rate is proposed for small business, which creates more than 70% of the jobs in both Canada and the U.S.?
Well, that's kind of something that kind of disgusted me with the whole thing, because when Trump ran for president, he said he wanted to lower that rate to 15%, and what he was speaking of was S corporations. In the United States, those are what most small business people got. I've got several of them. And the way they work is the money flows. You set up a corporation, but the money flows to you as income, not as salary or capital gains, but as income. And the last proposal in the House or the Senate, one of these two bills, was to make that rate 35%. Or it's very confusing. They want to make 70% of that income from the S corporation at 35%, and the rest at whatever your income tax rate is, which would be probably about 25%, or say if you're making over $100,000 or something. So it actually kind of can go up on you if you run a small business, while the corporation rate, the big corporations, get 20%. So it's just really crazy. They're going to, the way the thing stands now, you can pay more taxes if you run a small business like I do. It's just crazy, but hopefully that'll at least change. And that's, one of the things that's happened is there's a small business, lobby group that's come out against the bill just because of this fact. So it's just a total circus and mess, and hopefully, enough people can pressure them to change some of this and make it better, because that's what's so funny about it. They say, well, this is going to stimulate the economy and do this and that, but they're not helping the small business person out at all when it comes to how much they're going to be taxed on the income. The positive is I saw that they're talking about you can deduct things possibly instantly. Like, say you got a small business and you buy a car, or buy a machinery or something. Normally you've got to deduct that out over 5 years, and they're talking, well, maybe we'll let you deduct that all in one year. So that would be helpful, but who knows what is really going to happen. And they make these things, the way they've been doing this is they'll try to make it secret what they're doing and then present it so no one can argue against it. And then there's your bill. So you got to be for it or against it. You can't try to, they don't have people lobbying to try to, as it's being made. So it's very strange, but who knows, the whole thing could collapse. Both these bills could collapse. Then I would still think they would have to come back and pass something before, the end, of the next legislation session, because the Republicans need to pass something to show that they're able to accomplish anything at all. So I think that's the one thing that makes it likely that something will be done one way or the other. Who knows? It'll help some people and hurt others. That'll be the bottom line to it, though, whatever they do, it seems like.
Sounds like the United States of confusion.
Yeah, well, it is. You can't keep up with it. What they're doing changes week by week, and what they say they're going to do, or what you think when you go vote, it turns out not to be what they want to do. What ends up happening, right? So, but again, I think the reason for all that is just the state that the country has been put in from the last 20 years of foreign interventions and bank bailouts that have crippled the government budget. So, in the Federal Reserve is also an example of this, because if you go, if you are someone who has a bank account and you want to get interest, you don't get any interest because interest rates are near zero, and they never seem to be able to raise these rates. And that's just a symptom of this economic malaise too. That really is how helped Trump get in office. But, so here's the Fed that over the past couple of years, when the stock market would have a dip or drop, they would, do a quantitative easing program or something. But their whole hope is that, the economy would pick up eventually, where, the GDP growth and corporate earnings would catch up with the stock market valuations, and that hasn't happened yet at all. In fact, the valuations have gotten higher and higher this year with the rally. So, to me, it looks like we're just creating another bubble in the stock market, like we saw in real estate 10 years ago or 15 years ago, and with the NASDAQ in 1999, 2000. So this looks to me just like a bubble growing, and probably will top out next year. But I've got to look for signs of the top. I can't just predict something and say, oh, it's going to top out in April or something. So, in the indicators I use, they only look, really, 6 weeks ahead. I can see some weakness, but it really takes like 90 days of defined weakness to really be able to spot, that something's changing in a big way in the stock market. So I can't say that now, but at some point next year, I wouldn't be shocked if that's the case. It doesn't mean we're not going to go up a little more here, though.
Mike, thank you so much for chatting with us.
Thank you. Great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. You're listening to HowStreet.com radio. If you have any questions for us or our guests, they can be emailed to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.